Financial accounting is a branch of accounting that focuses on recording, summarizing, and reporting a company's financial transactions. This information is used by various stakeholders, including investors, creditors, and management, to make informed decisions about the company's financial health and performance. Here are some key components of financial accounting. 1. Financial statements. The primary outputs of financial accounting are the financial statements, which include balance sheet, shows the company's assets, liabilities, and shareholders' equity at a specific point in time. Income statement, provides information on the company's revenues, expenses, and profits over a specific period. Cash flow statement, details the cash inflows and outflows from operating, investing, and financing activities. Statement of changes in equity, shows changes in the company's equity over a specific period. 2. Double entry accounting. This fundamental principle of financial accounting requires that every financial transaction affect at least two accounts, ensuring that the accounting equation, assets, liabilities, plus equity, stays balanced. 3. Generally accepted accounting principles, GAAP. In the United States, financial accounting is guided by GAAP, a set of rules and standards that ensure consistency and transparency in financial reporting. Other countries may follow different frameworks, such as International Financial Reporting Standards, IFRS. 4. Accrual versus cash basis accounting. Financial accounting can be performed using either the accrual basis, where transactions are recorded when they occur regardless of cash flow, or the cash basis, where transactions are recorded only when cash is exchanged. 5. Revenue recognition. This principle dictates how and when revenue is recognized and recorded in the financial statements. It ensures that revenue is matched with the expenses incurred to generate it. 6. Expense matching. Expenses are matched with revenues to determine the net income for a period following the matching principle. This helps in accurately assessing the company's profitability.